Good morning, it's Monday the 13th of December and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. Now, it's been a good few days for us here at Atlantic. As you may have heard, we picked up the award for Best Trading Signals Provider at the 2021 Pro Trader Awards. Now, what makes this so special for us is it's voted on by professional traders, so we must be doing something right. If you want to see why so many people voted our trading signals as the best, download the app and see for yourself. It's free and it works on all platforms. So enough of that, let's get back to what really matters, and that's what's happening in the markets this week. So, as always, we'll start with a quick summary of the key macro data points coming up in the week, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So, down to business. So, let's take a look at the economic numbers being issued this week. And starting today, we'll be hearing the latest Japan Tankan Manufacturers Index. On Tuesday, we'll hear officially how the employment situation in the UK is looking, something that we'll discuss in more detail shortly. We'll also hear the latest industrial production figures in the Eurozone and the PPI numbers in the US. On Wednesday, we'll hear how both industrial production and retail sales are faring over in China. CPI figures in both the UK and Canada, the retail sales over in the US, and the latest crude oil inventories. This week is also an important week for interest rates in several key economies, and Wednesday is the turn of the US to announce their latest interest rate decision. And that's something we'll discuss in a moment. Thursday is also the turn of the UK and the Eurozone and indeed Turkey to each announce their interest rate decisions. And we'll take a look at the BOE and the ECB situation in more detail shortly. We'll also hear the latest global manufacturing and services PMIs and the latest manufacturing and industrial production figures over in the US. Finally, on Friday, it's also the turn of Japan to announce their latest interest rates. And we'll also hear the latest PPI numbers in Germany and the final CPIs in the Eurozone, as well as the latest UK retail sales figures. And the companies that'll be reporting this week are: on Monday, we'll hear from S3, on Tuesday, Ocado and Purple Bricks, and both of whom we'll discuss in more detail in a moment, and Watches of Switzerland. On Wednesday, it's the turn of Currys. And on Thursday, Go Ahead Group and FedEx. And finally on Friday, Darden Restaurants. Well, Christmas might be approaching, but the markets are not getting ready to slow down just yet. This week is jam-packed with macro releases and central bank meetings, keeping monetary policy and surging inflation at the forefront of investors' minds. In addition to central banks and economic data, the virus and the new strain of the virus will be very much in focus. Investors will continue digesting new headlines and developments which could still move the market dramatically. The British government imposed tougher restrictions under Plan B. Will there be a Plan C as numbers continue to surge? On Tuesday, we'll hear the latest UK unemployment figures. Now, back in the November Bank of England meeting, Governor Andrew Bailey said that the health of the UK labour market was a prime consideration for the central bank when deciding whether to hike interest rates, adding that the BOE wanted to see how the labour market adjusted to the winding down of the government's furlough scheme. In the most recent data, the ILO unemployment figure dropped to 4.3% in the 3 months to September. Job vacancies rose by 64,000 to a record 1.17 million for the 3 months to October. The unemployment rate is expected to fall to 4.2%. Now, falling unemployment coupled with record vacancies suggests a tightening of the labour market, which is consistent with the BOE tightening monetary policy. However, with the Plan B restrictions, the BOE is expected to hold off until February. Also on Tuesday, Ocado is expected to deliver a trading statement for its 50-50 joint venture with Marks & Spencer's, covering Q4 until the end of November. Now, back in September, they warned that rising driver costs, in addition to the recovery from a fire at its Erith fulfilment centre, will add £5 million in extra cost to this year's results. The fire had also cost £10 million in lost orders. Sales at the joint venture slumped 10.6% in the quarter ending 19th of August versus 54% growth in the same period last year. And this not only reflected the fire, but also changing habits as customers returned to bricks and mortar shops. The latest Plan B, not to mention any potential Plan C restrictions, could be good news for Ocado, but it's still up against tough comparisons to the fourth quarter. Also on Tuesday, we'll hear from the online estate agent Purple Bricks. Now, the company has seen its share price plummet 70% since mid-April. Whilst the share price had been trending lower, the sell-off intensified in November after the last update when Purple Bricks warned that instructions had slowed significantly owing to an imbalance in housing supply and demand. The firm also warned of downgraded expectations for the full year. The number of homes listed on Rightmove has fallen 45% compared to a year earlier, indicating that the tough trading conditions may have continued. Wednesday brings us the latest interest rate decision from the Fed. Now, in the November meeting, the Fed announced that it would start to taper its $120 billion monthly bond purchase program by $15 billion a month, comprised of $10 billion in US Treasuries and $5 billion in mortgage-backed securities. The Fed's tone has become noticeably more hawkish in recent weeks, with Fed Chair Powell saying that the word transitory can be retired from use with inflation, whilst also suggesting that the pace of tapering can be accelerated. With inflation at 6.8% in November, an almost 40-year high, over 3 times greater than the Fed's 2% target level, and the new virus variant potentially adding more upward pressure to prices, there could be the calls to taper bond purchases at a faster pace. The Fed deciding to taper at a pace of $30 billion won't be that surprising. Should the Fed adopt a faster pace to tightening, the US dollar could push higher. So, of course, do keep an eye on the US dollar and US indices. Thursday is also a big day on the interest rate front, with firstly the Bank of England due to make their latest announcement. In light of the government's latest work from home advice, the Bank of England is broadly expected to wait until early next year to raise interest rates. And this comes after the bank prepared the market for a rate hike in November, but actually voted 7-2 to keep rates steady at 0.1%. Policymakers said that they wanted to see how the labour market coped with the winding down of the government's furlough scheme. The labour market has so far held up and inflation has continued to rise. With the new virus strain now spreading fast, the Bank of England is expected to adopt a wait-and-see approach to assess the likely impact of the new strain on the economy after stricter restrictions were imposed. But for now, expect the Bank of England to stay put on policy. As a result, do keep an eye on the pound and the FTSE. Likewise on Thursday, it's the turn of the European Central Bank to make their latest interest rate decision. Now, the fourth wave of the virus, in addition to the new strain, is complicating the outlook for the ECB ahead of what was expected to be an important meeting. Most economic data is pointing to a slowdown in momentum across the Eurozone. The virus is expected to add yet more pressure, of course, and meanwhile, inflation keeps on rising and may not be quite as transitory as the central bank originally thought. We'll also get a new round of projections from the ECB, although no significant changes are expected. In the September projections, GDP growth was expected at 5% this year and 4.6% in 2022. Inflation was forecast at 2.2% and 1.7% respectively. The fall in oil prices is expected to keep inflation projections low. Discussions at the ECB meeting are not expected to focus on tightening, but more how to progress with the bond buying programs, the PEP and AP. Now, whilst the PEP is still expected to end in March next year, more flexibility could be seen in the AP to avoid a cliff edge ending. So do keep an eye on the euro. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from AB Foods, Burberry, United Utilities, and B&M European Value Retail. In the FTSE 250, we'll hear from Sirius Real Estate, Mighty Group, Britvic, and Tritax Eurobox. So there you have it, that's the week coming up. And if you're a new viewer of our regular videos, why not click on that subscribe button just to make sure you don't miss our regular market updates and indeed our special market analysis videos as soon as they're released. And we do have some interesting stuff coming up in a short while. And don't forget that app, of course. Apparently, it's not bad. So until next time from all of us here at Atlantic Capital Markets, have yourself a great week.